Video, we're going to be talking about the UAE and the VAT. Everything you need to know as a business owner, perhaps coming from somewhere like the UK where you're familiar with the VAT side. Everything over here might seem foreign, confusing and daunting. But don't worry, because in this short video, I'm going to run through everything that you need to know as a business owner here in Dubai when it comes to VAT. So the first thing to mention, in Dubai, yes, there is VAT, and for most of the time it's at 5%. That's basically the standard rate if you're familiar with the UK side of the VAT things. But also here they've got zero rated and exempt supplies. So for most people that have set up a company in here, you're either going to be doing business to other UAE companies, in which case a lot of your supplies might fall under the standard rate and you'd have to charge 5% VAT on them. But most people following this channel, you're probably coming from the UK, you might be having a company set up here in Dubai to help reduce taxes, you've got businesses in the UK potentially, and all of your customers and clients are going to be based all over the world, somewhere like the UK. So the focus of this is more towards the international side of things, because it's important to differentiate this here. Because if you've got a company based in the UAE and you basically only supply, for instance, your own company, you do management charges in the UAE, that is considered a zero rated service, the export of that service. And what that means is, although it does count towards your VAT threshold, you don't have to charge VAT, and you can also reclaim VAT on any expenses. So when do you need to register for VAT here in the UAE? Quite simply, as soon as your turnover, so your total cumulative turnover within any 12-month period exceeds 375,000 dirhams, and it's important you do this as soon as possible because late registration could land you with a 10,000 dirham fine. So sorry for interrupting the video here, but I would just like to bring to your attention the consultation service that we offer with myself. So as a chartered tax advisor experienced in UK, UAE, Dubai, property, all of this tax and overseas wealth management, I'd like to give you the opportunity to book a consultation directly with myself to run through your personal circumstances. Watching YouTube channels and other educational videos is fantastic, but there is no substitute for tailored professional advice from somebody who knows the landscape rather than just putting it into a brief YouTube video. All you need to do is click that link below to get a consultation for an exclusive discounted price for everybody that follows the YouTube channel. So when you hit the VAT threshold, it's important that you do register. You can do this yourself with the Federal Tax Authority, or you can get an accountant to do it for you. It can be quite a lengthy process and take a number of hours with lots of documentation required, trade licenses, articles, basically a whole lot that you have to give to the FTA out here in Dubai to get that VAT registration. And then once you are registered, you will need to do quarterly VAT returns unless you've got a VAT exemption in place because you're only making zero rated supplies. But for most businesses, you will need to register and then do these quarterly submissions. If you're late for registration or late for filing, there are penalties, so it's important that you get this done on time. If you're supplying your own company in the UK, so the actual supply here would be considered zero rated from the Dubai company to the UK, and then most of the time in the UK, that could be brought under a domestic charge mechanism, which is where your company in the UK would have to charge VAT at 20% on that invoice that it's deemed to have acquired, and also it can reclaim it. So the net effect is they cancel each other out. But if you've got, say for instance, an e-commerce business here in Dubai and you're supplying everyone all around the world, you'll have to look at the individual VAT landscape of each different jurisdiction because it can become quite complicated. Whilst, for instance, if you're doing e-commerce or digital products, you might have no Dubai VAT footprint because you're exporting this service or product. In the UK, for instance, you probably will have a VAT footprint, especially if you supply online materials and online courses. Usually there's still that 20% VAT to contend with unless you've got some kind of live interactive teacher involved, which can alter the supply for VAT purposes. So what type of supplies can be exempt? Well, typically these are where they're quite significant. So we've got financial institutions, so typically kind of insurance policies, property transactions are typically exempt from VAT. As is kind of, we've got it here, local passenger transport, bare land. So most of the people watching this is not going to apply to you. But we've also got what is zero rated. This is probably the most applicable for a lot of people. It's either going to be zero rated or standard rated. So if a supply isn't specifically exempt or zero rated, you can assume that it's standard rated. So zero rated supplier, export of goods, international transport of goods and passengers, certain means of transport such as trains, trams, vessels, airplanes, the first sale or rent of residential buildings. So again, very similar to the UK, the VAT landscape out here, aircraft, precious metals, healthcare, educational services, related goods and services. So the main one there that you're probably going to be focused on is the export of goods and services. Whether it's professional services, a lot of people supplying professional services, accountancy, management, consultancy, that's caught under that zero rated. So you basically do charge VAT, but at 0%. If that's any supply you're making, you could look to get a certificate of exemption, but for most people, you probably will have to register. You can reclaim VAT on all of the goods you acquire, so office costs and anything else that you incur over here, and you only have to charge it at 0% because it's zero rated. Anything else, such as transactions with the mainland, are probably going to be 5%, so you need to make sure you've got good record keeping so you can show exactly what VAT you've charged because of where the customer is located. I hope you find this video useful. Please do make sure you give it a big thumbs up and tap that subscribe button so you get notified as soon as we post more brilliant tax saving content. Bye for now.